Okay, we get ready to go. Hello, ladies and gentlemen. Once again, you're here again for another Facebook Live. Hey, we have a great show today. As you know, the insurance industry, the rates are going up. We have businesses covered in our community. We're educating our people. As we say, the cavalry is not coming, the creek is rose, the levee is giving way. It's up to us to save us. And so, once again, as we begin to go into the holidays, we got to be covered. Okay, with the recession, they're talking about the recession is coming. They're talking about the rates are going up. They saying housing is no longer an option in our community. They're saying that our kids can't even go to school. But I'm here to tell you that the cavalry is not coming, ladies and gentlemen. The creek is rose, the levee is giving way. I thank you for allowing me to come into your house tonight. Like I said, if you have missed it, let's get everybody around the house. Let's get your friends, tag somebody, share it. Get ready to sit in on what we can do to secure the bag in our community. I'm not saying that you got to be rich, but I know that there's things that we can do in our community to put us in a better position for the future generation. You might not want to do it for yourself, but look at the kids around you. If you don't want to do it for your kids, do it for your parents. If you don't want to do it for your parents, do it for the next generation. So once again, the cavalry is not coming, ladies and gentlemen. The creek is rose, the levee is giving way. We have a great guest on our show tonight. We have one of the top insurance agents in Indianapolis, in the Midwest, here, right here on our show tonight. So if you missed this, you're missing out. Get your friends together, get your kids together, sit them around. This is going to be user friendly to everybody in the house. We're going to talk about something tonight that can help out the whole family for a long period of time. As we all know, we support people in our community. Thank Michael Mumford for coming in. He's been a part of what we've been doing here at MAD Capital Investment Group. He's been at our network night 2 or 3 times. He's came in. He said, "You know what? I must say it before you tell everybody. I gotta say it. He was supposed to have been on a couple weeks ago. I missed the ball. I dropped the ball, and so he saw me at our next network event. He said, "Listen, either you're gonna put me on the show or I'm gonna come and bum rush it. So one or the other, I'm getting on." So once again, I thank him for coming and being persistent. I thank you for coming on our show. He has a wealth of information that we need in our community. We need his services. If you have any questions about any of the things, drop us some questions. If you have any questions, we want to be able to answer them tonight. Once again, ladies and gentlemen, the cavalry is not coming. The creek is rose. The levee is giving way. It's up to us to save us. Tonight, you can ask the questions that can help you get out of the rat race. Without any further ado, Mike, what's going on? I ain't gonna have you come and take over my show.
No, no.
Invite you in. You ain't got to do that for me. But
Wonderful.
tell me a little bit about what you do before we start asking any questions. Tell me a little bit about you, a little bit about your company, a little bit about what you do.
Man, thank you once again, Mr. Jackson, for having me. Delay is not denial, so I am here. I'll take delay any day of the week. But man, I'm just excited to be here on your platform. I'm excited about what I do. And my job is to educate folk. And I just believe if I educate enough folk about the life insurance space and how to do it the right way, that God's going to take care of my company. And he's already done that thus far. But it's about moving people from the information stage to the implementation stage. And as you know, so often we get caught on trying to accumulate as much information as we can. A year goes by, 5 years, 10 years, 20 years, and you've done nothing. You're not insured. You haven't bought into real estate. You haven't done this. So my job is to do that, man. I grew up in this community. Went to college down in Evansville. Been in the corporate space all my adult life. Started back in 1998 in the insurance space. Man, it just had a passion for helping people. And be quite frank, man, I've seen too many people in my community and in my own family die, for lack of a better word, without having any coverage in place. And for me, I just don't see that's a problem for me, especially when I know that insurance is affordable
Okay.
and everyone could have it.
All right, all right, all right. So tell me a little bit about your company. We want people to know who you are, where you at.
Transitions Family Life is my company. We specialize in life insurance. We do critical illness, disability insurance, Medicare, things of that nature. But I'm here in not only in Indiana, Illinois, Tennessee, Texas, Ohio, Michigan. So I'm growing, expanding.
So you're global now. So you're global.
Hey, I wouldn't put global, but I'm moving in that direction. But
Okay.
but but here's my thing, Mr. Jackson. I got to take care of my own backyard first, and my own backyard is Indianapolis, Indiana. So
Wow.
that's where we're headquartered. That's where we're headquartered here first. So yeah,
So once again, ladies and gentlemen, we're going to be talking about life insurance today. We're going to be talking about health insurance. We're going to be talking about with the rates and everything going up. How do we get into a space to where we can help each other? Michael, what have you seen? I just pulled up some statistics about 10 minutes ago. They said that 300 million Americans is insured in the insurance space, right?
right.
How is that translating in your business? And do you see that we are covered in that 300 million? How are we covered?
Well, you can look at it. It could be construed as disproportionate, but most of us are covered either under employer health insurance, or we have the ACA, which is under your Obamacare.
Okay.
But most of our seniors in the Medicare, 65 and over, have taken care of that. So we are represented quite well in terms of health insurance.
Okay, so all of that stuff that's saying we're not insured and we protesting, well, we're not insured. We have the insurance. We just don't have the right type of insurance to create generational wealth, right?
Absolutely, absolutely. And
Yeah.
when you talk about that in terms of creating generational wealth through life insurance, it's just a lack of the educational piece around it. Most people believe life insurance is for the dead.
Wow. Yeah.
Life, and think about it, inherent in the phrase life insurance, it's life. Life insurance is for the living. Life insurance has been used for the living forever. But we just have to know how to do this thing the right way. And
Okay.
that's what I'm here for, and professionals like me in this space are here for.
Okay. So what is one tool? I know me and you kind of talked and you kind of blew my mind with this one because I'm in the mortgage industry and I'm in the real estate game. And you was like, Cepeda, you got to get me on the show. And this is kind of what sealed the deal for me because you were like, hey, Cepeda, you are the biggest one who need this thing and talk about this. Tell me a little bit about what you was talking about with everything that's going on with the interest rates. We just came out of a pandemic, right?
Mhm.
A
Right,
lot of people lost a lot of wealth during that time.
right.
What is some of the things that we can do to get us back on track, even in this hostile mortgage interest rate, housing bubble, whatever you want to call it? What can we do to ensure or protect what we had already accumulated, the little bit that we got?
Absolutely, absolutely. That's a great question. And you'll find out when you research me, I really focus on safe money options. Let me say that again:
Safe money
money,
option.
safe money options. So with that, when you look at life insurance, permanent life insurance is used as a vehicle to not only accumulate money, but to accumulate money tax free.
Wow, tax free. I'm all
And
about
not
that.
only and not only tax free, when you after you fund that policy, and we'll talk about that in a minute, you're able to not only grow it tax free, but it blossoms and then it's transferred tax free. That's how you begin to build generational wealth for the generations to come through life insurance. I tell people all the time, this is not chess, folks. This is checkers. It's very simple. You just have to be in the game to win it. And it's very simple to set up. So the key takeaways: accumulate, growth, and transfer tax free. You're probably saying, well, Mike, how is that possible? Life insurance, if you look at the IRS code 7702, it will explain how you can grow and transfer tax free. We won't have time for that tonight, but if you got time, look it up. But it allows you to do that.
Okay.
Yeah, it certainly allows you to do that. So here's what you said. Well, how is it safe? Well, in particular, I love the product they call IUL, which is Index Universal Life Policies. You can do this with the permanent policy as well, but I do like IULs. But it allows you to participate in the gains of the marketplace when they're favorable.
Okay.
But then on the opposite end of that spectrum, if the bottom falls out of the market, you have a floor, a zero floor, which you lose absolutely nothing.
Wow. So it's a win-win. Okay. So let's talk about that.
It's a win-win.
What is it called? IUL, right?
It's called Index Universal Life Policy.
Okay. Now, is that a whole life policy? When do you pick it up and when does it expire?
It is a whole life policy under the permanent policy umbrella. So look, you can get these policies on a 2-year-old, on a 1-year-old, 15 days old. A lot of the wealthy people have these policies on every member of their family, because I know everyone has heard about this in the space about infinite banking concept or becoming your own banker. Look, Jack, all that is a concept. All it is a mindset. You're going to accumulate money inside of this policy, whether it's a whole life or IUL. You accumulate it, and you take loans off your accumulation, and then those loans never become due in your lifetime. But I never tell people, that's just for your information. But you pay yourself back like you're the bank. So instead of going to the bank to take $10,000 to buy you a rental property, you go to your own bank, which is your IUL, take out $10,000 loan to buy that rental property. Oh, and by the way, follow me, that $10,000 did not come out of your account. It came out of the insurance company's general account by way of a loan.
Whoa.
So your money is still earning uninterrupted compound interest. So not only is it still earning interest in your policy, you took that money out and made another investment, whether you flip the property or put it in a portfolio and you're gaining interest on that. Think about how that money has now made children, grandchildren, and possibly great-grandchildren. And that loan.
Slow down. So you got to slow it down for me.
I'm trying to. I get excited.
Okay, hold on. Slow down. So once again, ladies and gentlemen, did you just catch what he said? You put the money in the account. That sounds like a bank to me. I put the money in the account, and instead of lending it to somebody else, when you go into a regular bank, instead of lending it to somebody else, you're saying, go create this bank, put the money in there.
Yes.
Go pull, they'll lend you your own money back, right? And they'll keep paying interest on it as if you left it in there, right? And then you can do something else.
Hey,
the cavalry ain't coming, ladies and gentlemen. Once again, this is one of the brightest guys in our community. This is why we miss out on everything that's going on. If we would have known about this during the pandemic, guess how many people, when you got your PPP loans and RSG loans and ZYX loans, guess what we should have been doing? We should have been hooking up with Michael so that we can set up these policies, because you're going to go spend anyways.
Yes.
So you're going to go spend anyways. So once again, we shooting ourselves in the foot. We could have been lending and investing into ourselves way back when, right? Absolutely. So once again, let us tap in. Now he's telling us, when they're talking about investment banking in the middle of the night on those infomercials, guess what we should be doing? Michael is giving it to us while we woke. Okay, we ain't sleep. We ain't it. We might be eating a little bit of dinner, but guess what? He's just told us, open up one of these accounts, call him up. His name is floating right down there at the bottom. Call him up, show him how to set up. He'll set you up. Now, how much does this type of stuff cost? Is it very expensive, Michael? It got to cost an arm and a leg. You got to give some blood. What you got to do?
So that's the misnomer in the community, that you have to be wealthy or rich to have these policies in place. That's just absolutely not true. You use this policy on your level. Look, my job is to design the product, the policy in the right way. then your job is to fund it correctly. So we both have a job. You have to have a professional that understands how to design these policies for optimum cash accumulation, not for the agent, but for you.
Wow. So once again, when I put my money with you, because we're gonna talk after this is over, and I'm gonna
Mm-hmm.
put some money in there so that I can become the bank, because I think
Yes,
I can control my own money. So if you
absolutely.
have struggled, if you're wondering about this quote unquote recession, you can get out of this rat race right now, today.
Absolutely.
So the cavalry ain't coming. This is what the rich people are doing. This is what the middle class is doing. Yes, we might be in a recession, but you don't have to go into a depression. That's what I tell people.
Absolutely.
We might be in a recession, but we don't have to go into a depression. What we have to do is surround ourselves with people like Mike, utilize his service, squeeze that orange until all the orange juice comes out, and then guess what we got? We got something that's nutritious. Mike, talk to us a little bit. I want to talk about the mortgage stuff
Okay.
because that's the work that I'm in. A lot of people are scared about buying houses. They're scared about I might lose my job. We just came out of a pandemic. The interest rates are going up. I might get sick. All of these excuses. Kind of help us out, Mike. You got to give us some answers because that's what people want to know. Okay?
Well, look, here's the reality. I don't care what the interest rates do. People are always going to need a place to stay.
All right.
You understand that, whether you're renting or whether you're buying a home. So here's the reality. People are going to need a place to stay. People are going to continue to buy houses. It may slow down, but it's going to continue to take place. Home ownership is one of the greatest things you could do in terms of building generational wealth if you do it the right way. And you need to get with Brother Jackson to do that the right way.
Oh, yeah. You need to call me up.
Oh, yeah. But in terms of mortgage protection, look, you hear all about this on the internet and everything. Folks, mortgage protection is only a term. It is, I call it the new school life insurance policies. And what it does, it's a life insurance policy. Typically, it's a term policy, 10, 15, 20, 25, 30 years at max. Term just simply is short for terminating. It means that if you die, become chronically, critically, or terminally ill or disabled, that it pays off the mortgage.
What?
So here's the thing, Brother Jackson. Look, you have to get homeowners insurance to buy real estate. Am I correct?
Yes, you got to get
if you're doing it from the bank. They require, that is a mandate, it's a requirement. But there is no mandate stating that you have to do mortgage protection, which is protecting your economic value to your family. I always say it like this. If you pass away, can your family stay? That's the question you got to ask. And all it is look, it's so inexpensive that people laugh when they sit down with me like, I thought it was hundreds of $300. No, it's not expensive at all. But what it is expensive is if something were to happen to you and you got a $200,000 home, $100,000 home, even an $80,000 home, and you pass away and that income is now stripped out of that home and you have kids and you want them to stay in that home, it's going to be kind of difficult. So why not pay the money, leverage the insurance company's money, and if something were to happen to you, death, critical, chronic, terminal disability, they give your family a check, pay off the house, let them live and have a lifestyle.
Wow. So you said, I want to make sure. So we got death if you die. Okay. Mm-hmm. We already know what that is. We're familiar with that.
Right? Yes. Basically. Yes.
Now, one of the things that we wasn't familiar with is chronic illness. That means I can still be alive and get this type of insurance. And guess what? I ain't got to sell nothing. I can keep it going.
Absolutely.
Well, hold up, slow up. Now the cavalry is not coming. Now I want my listeners to know the cavalry is not coming. The creek is rose. The levee is giving way. He's educating us on how we can maintain our wealth in a volatile situation. If I get sick, COVID, if I get sick, high blood pressure, if I get sick, diabetes, if I get sick, stroke, If I get sick, sugar. If I get sick, cancer. If I get sick, lupus. If I get sick, all of these things, this can help me out.
Absolutely.
So,
Absolutely.
so once again, we can take these vices that they put in on us, these things that they put on us. Now we got some things that we can fight back with because now we ain't gonna be stressed out. If I get sick, that's fine.
Yes.
Okay, I'm gonna pay off this mortgage. I have $300,000 house. I'm gonna be sipping on some tea and chilling like the rest of y'all. But we don't know this, right?
Yes.
Why do
Yes.
you think this is such a big kept secret?
Because I think insurance historically has just been, we thought about it in terms of final expense burial costs. Oh, especially in our community, you better have enough to get you buried, put you in the ground. You better just have just enough. Back in the days when they had the debit routes where you would go and collect a couple of dollars for a $2,000 policy, which wasn't worth anything. But I think that was just how we were indoctrinated. But these have been out for a long time, but we just don't. Look, no one wants to talk about death. No one wants to talk about insurance. My role is not the coveted role, the insurance professional, but it is something that's necessary. When I say a couple of three things are going to happen, either you're going to die too soon, you're going to live too long, or you're going to get sick along the way. We're going to fall into one of those categories. Insurance and it can help you in those categories. And you got to think. So when I say this is a living benefit, it's for the living. This is what I mean by the living. Look, you got insurance companies, Brother Jackson, that if you get a heart attack or you get cancer, they'll advance you up to 80% of your death benefit to use any way you want to, have to, or need to. No questions asked. To help you with those expenses that and I know that come along with having critical
So once again, so if you got a mortgage, ladies and gentlemen, he's saying get mortgage insurance, not the traditional. We get some mortgage insurance that is directly attached to your home to where it's something, if you get sick or if you get ill, or not only if you die, but if you get sick or you get ill, you can get some relief on paying that mortgage. Okay? Yes. He's giving you the answers. Yes. So if you got a mortgage and you worrying about, if my heart is going to be keep pumping, if I'm going to have a stroke, whatever it is, we're giving you some tools that you can use to keep that house in your name. Okay? He's saying that, death, if you die, the house is going to be paid off. Chronic illness, diabetes, all those things that they say that we die of early, that's prevalent in our community. Y'all know what the 8 diseases is. I ain't even got to remember. I ain't got to say them. Y'all know what the 8 big killers of African Americans are. Then it says a critical illness, not just a chronic illness, but a critical illness. That means that you got a death day. You got a time that you're going to die. So you want to live your best life before you leave this earth. And then, which is the killer, okay? If you become disabled, he's saying that he can help.
Yes.
You cannot get a better solution for your problem than this.
Jackson, I always tell people that insurance is a young person's game because the younger you are, typically, the healthier you are. These policies you do have to qualify for. But look, I don't care what type of concern that you may have as far as health concerns, there are policies out there for you. You just need to talk to a professional such as myself to be able to locate those. I'm a broker. I can find those policies. But it is something that you do and you have to qualify for. That's why it's imperative that you speak to someone like me to talk about it. But here's another piece that I think a lot of people that may have diabetes now that may have some concerns right now. So what about me? Well, this. Look, you may not be able to pay off the entire mortgage, but I would encourage you to get enough insurance that will cover your mortgage for the next 12 to 24 months, because we won't always be in a housing market like the last 5 years where homes are selling like that. But if you have enough that protects your equity, because here's the thing, if you pass, you want your family to have some time to grieve, and you want them to have some options. So you don't want people we got to go sell the house because daddy just died and we don't have any money. We can't keep up the mortgage. we don't know what to do, because what will happen is if you don't keep up the mortgage, what's going to happen? They're going to foreclose and take that house, and all that equity that your parents paid into is all gone. Get you enough insurance to where you got 12 to 24 months where you can pay your mortgage, and you have time to make some decisions, whether you want to stay in the house, whether you want to sell it, whether you want to fix it up and put it on the market, and you don't have to be pressed. So look, insurance is not a one size fits all proposition. That's why you need to speak to a professional.
Okay, got some questions for you. Got some people that's inboxing me.
I love it.
What do you got to do to qualify for these type of insurance products? What are some of the things that you have seen that you got to do to qualify?
Well, for one, you have to be like, for IUL, the term policies. Look, you can have cholesterol. You can have high blood pressure. Heck, you can even, in some cases, you can have diabetes if it's managed. But when you get outside of those parameters, then you're going to be looking at more of a equity style or a final expense type of policy, which has its place in the market. Don't get me wrong, but those companies are designed to help people that have some health qualifications. So, like I said, look, if you're younger and you're healthy, even if you're older and you're healthy, today is the day to do it, because you don't know what's going to happen in your next doctor's appointment.
Okay.
And all this information, everything that you've done in terms of going to the doctor, is on what you call your MIB, your Medical Information Bureau. So we have a report of everything. So
wow.
hopefully I answered your question, but you got to be fairly, you can have the basic high blood pressure, cholesterol, maybe diabetes, but when you get beyond that, we have to look at some other options.
Okay, cool. In a ballpark figure, I consider I'm a healthy guy. Birthday is coming up. I'm below 60, above 20. Okay, so what range would my policy? How much money are we talking about? Are we talking about $100,000 a year? Are we talking about $10,000 a year? $500 a month? 20 cents on the dollar? What are we talking about? How much are we talking about every month?
Look, I designed the policy based on your budget and your need. I have people that have done $50 a month, up to people that have done $10,000 a month.
Okay. Well, hold on. Let's stop there. So what does $50 a month get you?
So it depends on your age. It really depends on your age. Because
let's say 50 years old. 50 years old. Let's go down the middle. 50 years old, millennial.
Okay.
A little bit older than the millennials.
So a 50-year-old tip, and you talk about an IUL policy?
Yes.
Okay. I'm gonna give you just an example here really quick.
Please do, because ladies and gentlemen, we want to be able to have relevant information. So when we're making these financial decisions, we want to be able to stop what we're doing, pay attention, make an educated decision, and get your generational wealth. There's never a time that we should be aware of death. We should know what's going on around us. Thank Loretta for popping in on us. She's helping us stay healthy, because I'm giving her a shout out. She came on the show last week. She was talking about her vegan dishes. She's my chef now, my mom. It just makes me feel good when we support what we're doing and it's making us healthy. So once again, I enjoy Loretta. If y'all are looking for a great vegan dish, I had some great stuff that was going on, and she catered to our event, network night. Hey, it was off the chain. It was a great. We had businesses there that did some business. With Louis, we had all types of things. Next month we kick off our health month, but this is also National Insurance Month. Am I correct on that?
Life insurance, yes, absolutely.
Okay, so once again, in a ballpark figure, you ain't got to be 100% accurate. Okay. Tell me this. Let's get some numbers. If you was trying to insure me, I'm higher than 60. I'm lower than 60. Higher than 40.
Right.
Where do I need to be at? What type of $50 policy? I want a $50. What do I get?
So if you're doing it, so at 100,000, you're looking at about 134 at a 50-year-old male, non-smoker.
Okay, I don't smoke. I think I'm a sex symbol. I think
Right
I.
there.
Okay.
But that is across the board the cost of insurance for $100,000 policy. Now, when it comes to building these policies, especially when it comes to the banking model, then what I would do is determine how much that you can afford to put away for your own banking vehicle. So you may come to me and say, Michael, I want to put $200 away. I want to put it in this. I want to begin to build my own bank, my own policy. Then I would build that, and I would go in and I would determine the least amount of insurance that the IRS requires that you have as a 50-year-old male putting in $200 a month.
Wow.
So I give you the least amount. That way you can maximize your contributions that the IRS will allow you to do. So you optimize the policy in terms of the growth and the accumulation. So you want that accumulation to grow. You want it to accelerate. You want it to move. So you give the least amount of insurance and the max amount that they'll let you put in. And baby, you got a contract here that is moving you into your own banking model.
Okay, so I want to make sure that, because we want to do this, okay, for the listener that want to do it. So if I have $200, I'm a 52-year-old male, right?
Mm-hmm. Mm-hmm.
I have $200 I'm going to put in that account, right?
Yes.
So $200 goes in on tomorrow. Then another month, $200 goes in, right?
Yes.
Now, this policy, is it a life insurance policy says if I die, I get so much amount? How does that work?
So the money that you put into the policy, a portion of that money is going to go to secure the death benefit. So let's say, for example, you put in this is just an example, $100 and you got $100,000 death benefit. So that $100 is going into that accumulation account, depending on your age. Then a portion of that is going to pay for the $100,000 policy. The other portion is going into your cash accumulation account. This is where you begin to accumulate the cash, and it is tied to the S&P 500. So as that goes up,
stock market, yeah.
It's not in the stock market; it's just tied to it. So that's the difference. Your money's not in the stock market; it's just tied to it. So here's the thing: as you fund that, it begins to grow. This policy is flexible. Let's say you sell a piece of property, or you come into a lump sum of money. You can dump that lump sum of money into that policy up to a certain level, and we can talk about that later, but it'll turn it into a make, but I don't want to get into the weeds. But it allows you to put extra money into that policy, which accelerates the growth. So your job is to fund it. My job is to create it to where you get the maximization of it by having the least amount of insurance, and allows you to max fund it. Along the way, you put, let's say 3 months down the line, God forbid you get killed in an accident. Well, your beneficiary gets the full $100,000.
Wow. So let's talk about, okay, we got that piece. I think most of us understood this piece. This is where it gets a little hairy. Okay. Mm-hmm. I put $200 in there, right?
Mm-hmm. Yes.
Then the next month I put $200 in there. How much can I borrow against it? Is it 400, 800? What can I borrow against it?
So really you would have to see an illustration to really get the gist of this. But think about that. Out of that $200, a portion of that has to go to pay for the cost of insurance.
Okay.
The other portion is going to be dumped into what they call an accumulation account. Now you have to fund it. So this is a long-term play, I tell people, because look, you're going to save the money anyway. How it can become a short-term play is if you have more money to front load it, to dump it in up front. Some people can dump in $10,000 to start it, $5,000, $20,000. They may sell a piece of property. So what I'm gonna do with this money, I'm gonna dump $30,000, $20,000 into it. And then a lot of investors use these policies, real estate investors.
Okay.
But if you're just trying to do this thing systematically, you have to fund it. And you're gonna have to look at it in terms of a different type of retirement account that you're just putting the money away in. And you know that when it comes time for retirement, you can pull that money out by way of tax-free loans.
Wow. Okay. So in a ballpark figure, if I have $400 in there, cash that I'm putting in, some of it has to go to fund it. But so you're saying I can pull out like $100?
You could. You could possibly, depending. Yeah, you could. Yeah, definitely.
Okay.
If you have 400, yeah, you could definitely pull that out.
But we ain't talking about dollar for dollar,
No,
$400
no,
in, four hundred
no,
dollars out. I
no.
want to make clear
Yeah,
because
you
that's what
have to
we're
pay for
trying to
the
do.
cost of insurance. Absolutely.
Okay.
So that's why it's a long-term play. Unless, see, most of the clients in our community that I run into, they're not dumping lump sums of money in there. There's few that can, that have that access to money, but most people are using this because either they don't have a 401k or they realize the 401k is not the right vehicle for them moving into the future, and they're socking away this money. Because the question is, would you rather pay taxes on your seed or your harvest? We're all going to say, I'd rather pay taxes on my seed. So that's why you put in money into an IUL or a permanent policy, because you've already paid the taxes on it. Let it grow. Okay. And when you come down to retirement, you're not worried about taxes because it's tax.
Wow. So now, ladies and gentlemen, they're giving us exactly what we should be doing, and when we're getting these policies. And I like what you just said. And I don't know if the people caught it, but I'm gonna restate it.
Okay.
There's not gonna be dollar for dollar. This is gonna be a long-term investment. Mm-hmm. You're gonna pay your 401k. Okay. I tell people all the time, bet on yourself. Mm-hmm. This is a tool that you can have. You can have 2 retirement funds. Mm-hmm. Okay. You can have 3 or 4 retirement funds. You can work for 30 or 40 years at a job. Put some of that money away so that you can be able to live a lifestyle that's comfortable for you at a later date, right? Put $400 in, you're not going to get $400 come in there and try to get a loan. He's saying that we won't be able to do that. But what he's saying is your account rep, which is Michael, he'll be able to tell you this is how much you can pull out once you put in this amount of money. And this is how you're going to establish your bank. And it's going to be case by case by case by case. What works for you might not work for me, and what works for me might not work for you.
Absolutely.
Okay? And I think that we sometimes think, because we're living in the information age, that means that we want everything right now. Yes. Okay? Sometimes it's good that we take a little bit of time to sit back and think about what we're doing so that we can make a real educated decision and set ourselves up financially and our future generations. And this is what generational wealth is all about. So I was talking to a guy a couple of days ago. Well, I went on a trip a couple months ago. Well, about a couple weeks ago, about a week ago. And I was in Florida, and we was talking about funding some of the activities in our community. And I was thinking about what you just said. If we had enough people that was retiring with generational wealth, then it wouldn't be a problem with funding our schools. It wouldn't be a problem with funding some of the people that make law decisions, politicians that we choose. We can control our own economic system in our community if we start to invest in the proper things. And I think that what you have, especially in the mortgage industry, when they're talking about the interest rates going up, how does that work with mortgage insurance? Is that the same way? If I get sick, all I got to do, how much do I got to invest into it before they start receiving the benefit of it?
For just the pure mortgage insurance?
Yes.
So the mortgage protection, you can use an IUL for mortgage protection.
Wow.
Because the IUL, it also has the living benefits, the chronic, the critical, and disability attached to it as well. So I call it the Swiss Army knife of the insurance. So you can use it for being your own banker, for mortgage protection, for cash accumulation, for all of it. That is the ultimate policy. But if you wanted just a pure mortgage protection and say, you know what, I got my mortgage for 20 years. I want 20 years of protection, and with the chronic, terminal, and disability protection on there, then the day you start making your premium payments, the first month, if you pass 10, 20 days later, they're on the hook to pay you the death benefit.
Wow. So it starts
first day coverage. The moment they take out your first premium, Mr. Jackson, you are covered.
Woo-wee. So how much would $1 million cost?
It depends on your age. I mean, honestly, I've done
50 years old. How much would $1 million?
Come on now that's going to cost you some money on a 50-year-old, but for $1 million policy. But it could be. I mean, I look. I did $1 million policy just here recently, and she had the best health out there. And you think I'm lying? Her policy was only $80 a month for $1 million, but she's young, and it's a term. It was a 20-year term. Whereas I had a 48-year-old, they got a $600,000 policy male, and his was $108 a month. But I want you to think about something. If somebody said, "Hey, look, you give me $108 a month, Mr. Jackson, and if
Wow.
something happens to you
Calvary
next
ain't
month,
coming.
I'm gonna give
Calvary
your
ain't coming.
beneficiary $600,000." You immediately created an estate for your family.
Wow.
You can't beat that. That's leverage.
Slow down, ladies and gentlemen. Once again, he's giving us the game. I always say it's time for me to give the word. The Calvary ain't coming. The creek and roads, the levee is giving way. It's up to us. He just said it. A $200 investment. Just say $1,000 investment. Most of us never going to make $1 million. So guess what? That's a bet that you can win.
All day.
And you're going to win. So instead of going to get the Louis Vuittons that's going to decay in your closet, instead of going to buy the sneakers, instead of buying food that you're going to dispose of pretty quickly, why not invest into yourself that where your generation after the next generation to come? Then we will ask ourselves, how are they rich and we still poor? Well, guess what? They give $1,000 every month when somebody in their family dies. They have a $500,000 policy. You do that 3 or 4 different times. Guess what? I'm just thinking, all the people that passed during COVID, and I had a loved one that passed also, that passed during COVID, if they would have had policies that was indicative of what you're talking about, we would be, yes, it's still painful when you lose a loved one. Now, I don't want to take away from that.
Yeah, yeah.
But we also would be in a much better financial position if those people were financially literate, like what you're educating us on today.
Yes, yes. And
It's just amazing.
it's funny. I was talking to a group the other week, and I asked the question: do you really believe that the people that passed without life insurance had never heard of life insurance, had never been propositioned about life insurance? No, they probably have been propositioned about life insurance, heard about life insurance, knew about life insurance, but they got stuck in the information stage and never advanced to the implementation. And that became a problem, not only for you, for them, but for the next generation. Folks, we got to start taking action. And this is not a call to action. This is not, a shameless plug. This is reality. Tomorrow's not promised to any of us.
No, we did not know that COVID was coming. It got here and people started passing away. Yes. In our community. Loved ones start going to the hospital. Loved ones start dying in the hospital. We couldn't even go to the hospital to see them.
Yes, yes.
So, the traditional way of doing things is not always the best way to do stuff. So, Once again, as I was thinking about bringing you on the show, life insurance is almost like taboo in our community.
Wow.
That it's almost like taboo. But other cultures and other people, they look at it as a financial vehicle that is mandatory, not optional, mandatory. Absolutely. Mandatory.
Yes.
If you're going to marry my daughter, you better go get a life insurance policy, brother.
Yes.
If you're going to have kids by my daughter, each one of them better be covered under some insurance in case something happens to you.
Yes. Yes.
So once again, ladies and gentlemen, instead of going on that extravagant vacation, think about it. That $5,000 can go a long way with a life insurance policy. It can pay for about 5 years. So hey, listen up. The Calvary ain't coming. The creek is rose and the levee is giving way. It's up to us to save us. So we got to prioritize what we think is important.
Absolutely.
Just what we think is important. So once again, let's get back to the policies.
Mm-hmm.
What are some of your suggestions? If you are let's talk about the millennials now.
Mhm.
If you're 25, 26 years old, what are some of the policies that you should suggest? How much life insurance should they have?
I'm doing a summit for the a millennial conf summit next month where I'm a guest speaker.
Where at?
It's the information is going to be forthcoming, but I've already secured. But I'll let your listeners know where
Okay.
it's going to be here locally.
Okay, cool.
I'll give that
So we
information.
want to let y'all know. So we're going to post it. We'll get that information out. We're going to follow him. We're going to show up to your event. I'm going to be there. Let me know when.
Oh
If I'm
man,
not celebrating my birthday, I'm going to try to make it.
I
So
appreciate
let
it.
us
I
know.
appreciate it. But yeah, millennials, look, and I'm gonna do this really quick. The 401ks were designed for the baby boomers, and it made sense because taxes were high and they allowed you to put a portion of your income away deferred till retirement when they realized the taxes should be lower. It made sense. Great. Today, with the pandemic, the $1 trillion deficit, all the spending, all the money that we're printing on a daily basis, if I were a betting man, I'm thinking that taxes are probably going to go up. Would you agree?
Oh, yeah.
So I always encourage, now I'm not telling you not to do a 401k, especially if the company matches. If the company matches your 401k, you'll be a fool not to do it. But
Okay.
if you're trying to put more money over and above what they match, think again, look again. Remember, I talked about earlier, would you rather pay taxes on the seed or the harvest? And as millennials, you want to pay taxes now on the seed because 20, 30 years from now, I'm not going to say guaranteed, but if I was a betting man, you're going to be paying a lot higher taxes. So that's why I would recommend IULs, Index Universal Life Policies, because the cost of insurance for 20-year-olds and 20 to 30-year-olds are dirt cheap. I hate to use that phrase, but it's true. It's dirt cheap. So more of your premiums are going to be going towards your cash accumulation account. And think about the money that you're going to accumulate over the next 20, 30, 40 years. They won't be using banks. The ones that decide to act now, they're going to be going to their own IUL family legacy bank and saying, well, I need to buy a car. They're going there and pulling money out of their account and paying themselves back that interest. When they want to buy real estate with you, instead of they're going to go to get the money out and then they pay themselves back. So I tell them, do that and start thinking about your future early. It's almost like when I was young, they told me to get in the 401k, set it and forget it. And 80 to 90% of the people I talked to, that's exactly what they did. They couldn't tell you what's going on with their 401k, what's happening. All I know is I'm losing money. I'm up, I'm down, I'm an emotional wreck. I get to retirement. I don't know what to do with it. And so that's why I come in and help people. But millennials, yes, IUL, I would love to do it. If you're under budget constraints, you could do just a term policy and later on convert that term to an IUL. That's why, let me make this disclaimer. I have to make this disclaimer. Look, if anyone tells you that this is the only policy you ought to do, beware. If anybody tells you that, because insurance is not a one size fits all proposition. You have to look at a person's total situation, including their budget, where they're at in life, how many kids they have, how many folks they have to protect, the size of the house, how many kids they have. You have to look at all that and how do we get the most coverage that fit within their budget. That's why you need to talk to a professional. So I like to make that disclaimer. IUL may not be for everyone.
Wow. So, okay. So let's ask the next question.
Let's go.
Like our age,
Yes.
over 45, not yet 60. Where should we do? What should we do? What type of product should we have?
So
is it too late for us?
Never too late. IUL is never too late. If you can fund it, it is never too late. If you're healthy enough, it's never too late. It always comes down to this. Can you fund it? I'm going to design it right because I've been trained on how to design these for maximum optimization. So I'm going to design it right. The question is, can you afford to fund it right?
Okay,
So that's the
what
only.
Does that mean? What does that mean?
What I mean by that is, do you have money to put into your own policy? Whether that's $200 a month, $500, $1,000, or $50. If you don't have money extra, if you don't have a history or a habit of saving money, 9 times out of 10, you're probably not just going to start saving money in an IUL because I told you to do it.
All right.
So tip, if you have a history of saving, and I can see that, okay, that they do have a history of saving, then I would recommend IUL policies. Now here's a gem for your listeners.
Well, okay, so hold up now. You're going to throw out a gem. So
a gem for free, listener.
For free.
So a lot of people say, well, Mike, I'm not going to be able to qualify for IUL. I got the money, I can fund it, but I can't get it because I got diabetes, I had a heart attack, I had a stroke. But I'm cool right now, or I had some issues with the law, whatever. Here's what the wealthy and the rich have done for years, even when before IULs and they had ULs. If you have a child, you have to have an insurable interest in a party that you insure. Your child, your grandchildren, your sister, your brother, your mother, your father. If you have someone in your family, whether it's your child or your grandchildren, you can place an IUL on their life. They are the insured, but guess who the owner is?
You.
Guess who gets the tax benefits? You.
Wow.
Guess who guess who has total control of the policy? When you take out loans on that policy, the loans don't become due in your kid's lifetime.
Wow.
Not yours. But I'm not saying, but you pay yourself back. But I'm saying if the walls fall off this thing, wheels fall off of it, and you have to wait, I can't pay it back for another 10 years. It's okay. I'm not gonna come chasing you down saying you owe this for the policy. No, that's not the case. So that's a little gem people don't know about. Well, I can't do it because I'm sick and I had health issues. Yes, you can. You just don't know how.
Wow. So once again, ladies and gentlemen, he's educating us. He's giving us some jewels. The cavalry ain't coming. The rolls, levy is giving away. It's up to us to save us.
Yes, sir.
Once again, so listen. Now I'm going to give you the kicker.
Uh-oh.
I'm not 25 no more. I didn't crash my life and live the riotous living life all the way up until I'm 65.
Mm-hmm.
Okay, I'm 65. And now I'm almost 66. I'm starting to see the last days. I don't see the horizon no more. I see the sunset. Okay. Okay. So I'm about 67, 68 years old. Now what do? I ain't got no insurance. I done worked all my life. I don't have no 401k. My God, I'm paying a mortgage on my home. What should I do?
It really depends on, first, I would look at your budget. And if you're on Social Security income and you're on a fixed floor income, that's going to dictate a lot of the decisions. Mm-hmm. The second thing is going to dictate the decision is your health. There's a lot of 68-year-olds, 7-year-olds that are in perfect health.
All right.
So if you're in perfect health, yes, you can begin any type. You could start IULs, you could start a term, you could do a whole life. But when you get to that age, I would recommend that you look at a whole life type of product. Now, they have what they call final expense policies, which are ages anywhere from 40 to 85. And they're a lot more liberal. They understand that when you get in that range, you're going to have some health issues. But they do limit the amount that you can get. So
what is that amount?
It typically goes up to about 35,000. Usually you can get 40,000 max. And it's the final expense policy. And I do a lot of those because, quite frankly, you have a lot of people in the community that are on fixed incomes that don't have a lot of extra money. But at the end of the day, they don't want to leave that burden to their loved ones. And they want to do just a $10,000 or $20,000 policy, enough to have a respectable burial. And those have they have a place in this market, especially in our community. Don't get me wrong. Look, and I always tell, I had a situation where 4 kids, mother, no insurance. She couldn't afford it. So what do you think I told the kids?
Wow.
Really, what you could have done, the 4 kids, you come together, you all take out the policy on your mother. That's what the rich do. They always keep a policy on the oldest living member of the family. If we were smart folks, think about this. If you had 4 kids while you're young in your 20s, take $1 million policy out on your oldest living parent, your mother or your father. You guys pay for it. That's one of the best investments you can make, because as soon as your parent passes, I know this sounds a little morbid, but it's inevitable. If God says the same, they pass, you guys get $1 million check. You split $250,000 among the 4 kids. You just created an estate for all 4 kids that you put your money into to make sure, because they're probably the most in terms of the mortality chart. Your parents' probability of passing before you is a lot greater. So,
Wow.
kids do think about it. We just got to start. We just got to stop and think. Stop and think. You can have insurance on your parents, even if you just had enough for final expense. But if you wanted some more to help with your kids, the grandkids, build legacy, and you guys can afford it, sit down, talk about it.
Wow. So once again, ladies and gentlemen, are y'all hearing what he's telling us? He's telling us what we can do to help get our people out of the rat race. If you got grandmama, big daddy, all of those things, we got these people in our community. Thank God they're still alive. Let's go get a policy on them, insure them. Not only, let's not take up a GoFundMe.
Oh,
okay? Let's not take up a GoFundMe. Let us go and help out one another. This is how we win. This is how we must begin to start looking at finances and generational wealth. Guess what? If you leaving $100,000, $300,000, $400,000 for your family, that means that somebody has never experienced that type of a lifestyle. So now we can make decisions, better schools. Instead of you renting, you become a homeowner that you own free and clear. Okay? Instead of you paying high interest rate on a car, you're going to own it free and clear. You're going to go buy it, so let's just be real about it. So all of these things, he's educating. Michael is educating. Michael, I want to thank you for coming in and telling us how we can bet on ourselves, how we can get out of this rat race. Ladies and gentlemen, if you are struggling financially and you don't know how you're going to be able to do it, and if you're trying to buy a home, Michael gave you a solution even for that. Get some mortgage insurance to make sure that if you get COVID, or if you catch the monkeypox, or if you catch any of those things, guess what? You're going to be covered. His telephone number is 317-709-8704. You cannot miss. It doesn't matter. I asked some hard questions tonight. I told him I was going to give him some layups, but I think I gave him some alley oops, but I also held him down a little bit. I played football with him. Okay, I sacked him because these are questions that I know that a lot of people are. Hey, if I'm giving $500 a month, how quick can I get my money back? Well, he's telling you, you're not going to get the full 500, but you might be able to get 2. You might be able to get 175. Well, that is a start in the right direction, and you still got your policy. So that's a win-win situation. Mike, closing remarks. Is there any other thing that you think that we should know in reference to insurance? I know you dropped some gems on us. Ladies and gentlemen, you can come back and watch the show. Like us on Facebook. Like us on YouTube. Go on to YouTube, subscribe. It'll be there again. You can watch it at your leisure. If you are serious about getting out of the rat race, you need to call Michael. If you don't want to call Michael, call me and I'll give you his number, and we'll set up a time where me and you and him can go to his office if you don't feel comfortable. But guess what? You cannot just sit around and wait for it to happen. The cavalry is not coming, ladies and gentlemen. The creek is rose, the levee is giving way. This is why we're giving it to you. It's free. Only thing you got to do is come in, apply yourself, get out of the rat race. Michael is here to help you, okay? This is your opportunity to challenge yourself to do better than what your parents did. I was talking to a young lady today, and she was like, hey, she was talking about DNA. and she was talking about DNA being transferable, reshaping your DNA is reshaping your generational curses into generational blessings. So if we reshape our financial DNA, guess what we will be able to do? We'll be able to get the things that we really desire, right? Michael, is there anything else that you want to say to us tonight?
Hey, look, I just want to thank you for having me on your show. I've been wanting to get on for some
Thank you
time.
for thank
I
you for
love,
coming. Thank you for coming.
man, I love what you're doing. I love what you're doing, and I support it and will continue to support you. I just want to tell your viewers, look, man, information is free. Information is free. I would implore you that to schedule a time. We can talk over the phone. I do 80% of my business over Zoom, or we can do it face to face. But you need to see an illustration for yourself for it to come together for you. And I would love to do that for you. Hey, what you see is what you get. I don't have a vote. It's only one vote, and it's yours. And if it's something
Wow.
you want to do, I can help facilitate it. But at the very least, at least you are educated and you made an educated decision. Whether that's yes or no, is still an educated decision.
Wow. So one last question. The person said, how do you start the process? How you start the process? Let me answer that for you. Call Mike. That's the first step. Call Mike. Let Mike do a consultation with you. Reach out to him. Call him on the phone, just like he did me. Call him, tell him you're gonna bum rush his office. Don't let him go until he gets you your policy. Don't put picket signs out in front of him. Do everything you got to do because that's what he was threatening to do to me. So I'm gonna, I believe in you reap what you sow. So he said he wasn't gonna let me go until he came on my show. So once again, the first step you got to do is reach out. Education is key. I always say this: you can be educated and not do nothing. So that education that you had, I would have rather not you learned it because now you got the tools to do it, and you're just being lazy and not doing it, and then you don't have the excuse to say you didn't know. This is the downside about this show. I'm giving you everything that you want, so there is no excuse. It's deliberate. You don't have no excuse to say I didn't know. You don't have to say, well, I didn't want to go outside of our community. Got it right here inside of our community now. I wanted somebody to look like me. You got me and you to look like you now. Okay. You say, hey, it's too expensive. Well, guess what? Mike just told you it's not as expensive as what you think, right? So what is holding you up now? Give him a call, send him a text, give him a call, do like he did me. Just say, hey, listen, I'm not going to accept no. Denial is not no. Delay is not no. So I can say it now. So when they beat me up when they're not on my show, I can get them back when they get on my show. Delayed is not a no. That just means I got to make you realize how valuable I am. Well, guess what? Insurance, mortgage insurance is very important. I didn't even know it. And I've been in this business, the mortgage industry, about 20 some years. Never heard of mortgage insurance. I heard of like mortgage insurance, like MA insurance and stuff like that. But I never knew that if I got sick, my mortgage could be paid. I knew if I had a policy and I had a death policy, but I didn't know that we had these other tools out there. So you can learn something new. You can't teach an old dog new tricks. You can't teach him if he's willing to learn. Okay. And some dogs are just willing to learn. So always be learning. Mike, thank you for coming out.
God bless you, man.
Thank you. It was a blessing having you on the show. I thank God that you was persistent, that you made me pay attention. You didn't allow me to just keep going. Thank you for coming out and being supportive of our network night. We have network night once a month, and he is a product of it. We're getting businesses are coming together, and we're networking. We're sharing our monies. We're sharing our resources, we're sharing our time, and we're also having a good time. Some of the people who have been on our show have been blessed tremendously, and people are starting to get them out there. I want this to be a platform to where if you have anything that you need to be able to flip through one of our shows, subscribe, and guess what? You pull up Michael Mumford talking about life insurance, and how if you're going to buy a mortgage through me, I'm going to be referring you to Michael and say, hey, call Michael and see if he can help you out, see if you got some products and services that you can use. Can't force you to do it, but what I can do is say, hey, here go a guy that does this. If you're trying to figure out how to stop the rat race, if you're in a business, if you're running a business and you need life insurance, and you want to figure out how you can set up your 401k for your business, Michael is the guy to call. Give him a call, give him a shot. It ain't gonna hurt you, right? Once again, the cavalry ain't coming, ladies and gentlemen. The creek is rose, the levee is giving way. It's up to you to save you. If you are not in a position that you like, look at the person in the mirror and do something about it. Do something about it. Mike gave you some tools today to get yourself out of the rat race. So, Mike, thank you a billion times. Thank you a billion times for coming on the show and being a part of what we're doing here at Mad Capital. Not just coming on the show, Mike. I thank you for coming to our network night. I thank you for coming in and being a supportive of that. Ladies and gentlemen, we ready to start the 700 Club. We ready to start. We got some powerful stuff that's coming down the pipeline, Mike. We got some stuff that's coming down the pipeline that is life-changing.
Wow.
Life-changing. And guess what? It's going to be free. It's going to be free of charge. You ain't even got to pay for it. Ooh. All you got to do is show up. That's what we get ready to do. We're ready to have the 700 Club. The 700 Club is going to be for people who is looking to increase their credit score to get to a 700. We're going to have that. That's going to be going. Listen, I'm going to let the cat out of the bag. Mike, we're ready to start having our credit education classes and our home ownership seminars, which we originally charged for.
Yes.
We're going to start doing it for free. For free.
No excuses.
If you want to know how to fix your credit, if you want to learn how to buy a house, if you want to buy a house, it is going to be free of charge. No charge.
Awesome.
No charge. And it's not the song, no charge. It is going to be no charge. The only thing we're going to do is let you know when it is. Come out, learn how you can get you a house. We're going to help you get into a home. This is our campaign to try to get to 100 people before December 31st. So we taking the covers off. We're going to make a mad dash to get to 100, and it's going to be free of charge. We're going to be letting you know next week when our first class is going to be. It's going to be free.
Yes.
Free. You know, my mom used to say, Cepeda ain't nothing free. But hey, my mom used to tell me that ain't nothing free, Cepeda. There's a catch to it. This is going to be free. Why? Because we want to help 100 people get into the home. If you're a renter, if you even thought about buying a house, want to know about buying a house, in the next session, we're going to be having our next class that's coming out. It's going to be free. That's something that Mad Capital is doing. Loan Simple is the mortgage company that I work with. We're going to be doing that for free. Free. No charge. And so you're going to be able to come out, find a house, get qualified, do all the things that you want to do for free. Once again, ladies and gentlemen, thank you for coming out, Mike. Till next week, as I always say, the cavalry's not coming. The creek is rose. The levee is giving way. It's up to you to save you. Till next week, keep betting on yourself. Good night, ladies and gentlemen.
Good night.